Good day and welcome to SCO BRICS Insight, where we look at what's going on in the world of the BRICS. Now today I want to talk about gold. As most of you are aware, it's a good year for gold, and the gold price in 2024 was up over 30% on the year. But from a BRICS and SCO perspective, it was excellent, as both China and Russia are the world's top two gold producers, and between them they mine around 30% of global production. That's important given the annual production is only around 2,500 tonnes. Now, as an asset, it certainly worked with a price increase of about 30%, but demand for the precious metal increased in most areas. But the key factor was the ongoing central bank purchases, which set many records. Prices were influenced by a multitude of factors, and these include the disappointment in fiat currencies. The fiat currency is due to the escalation of sanctions and the transformation of the US dollar into an economic weapon has all made gold attractive. Now, in terms of projections for 2025, analysts anticipate a continuation of these trends, with the price of an ounce potentially reaching 3,000. Now, it's interesting that central banks were buying as over the last 2 years, because there's a lot of talk about a BRICS-backed gold currency. Now, personally, I think that is unlikely, but I know the focus of the newly expanded BRICS is to fully develop trade in national currencies through their payment systems, and a gold-backed BRICS currency or a gold-backed any currency is not going to happen in the near future. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund my channel and my website, SCO BRICS Insight, to further develop them. Now, you can do this by making a small donation, which can be done by clicking on the thanks button at the bottom of the video screen. Everybody who donates does get a personal thank you from me. Now, that said, members of the BRICS can defend their national currencies by having less exposure to the dollar, both in borrowing and trade, as this tends to devalue them. Every time there's a blip in international affairs, foreign investment vanishes from the emerging markets. However, China, India and Russia have now proved that you can have a successful economy that's based on your own national currency, particularly if you have sufficient gold in your reserves and you don't borrow and use dollars in your trade. Now, the majority of Russia's trade globally is now in its national currencies and its own in the ruble, and it actually sells its gold as being the second largest producer, not for dollars at the London Bullion Market Association in London anymore, where its companies have been banned, but at the Dubai Gold and Commodities Exchange, the Hong Kong Precious Metals Exchange and the Shanghai Gold Exchange for a variety of currencies. Now, do notice all those countries where the exchanges are members of the BRICS. Now, given that Russia produces around 340 tonnes of gold in 2024, we're talking about $34 billion at current prices, plus it's known that Russia has gold reserves around 2,300 tonnes, and China allegedly has 2,600 tonnes, but informed sources actually think it's more like 7,500 tonnes. Now, do bear in mind that the US is credited with 8,000 tonnes in its vaults, but as they've not been audited since 1957, I don't believe that for a minute. Because when Germany repatriated some of its gold stored in the vaults of the US, the number of bars they got back did not correspond to the ones they sent. Now, other countries looking to repatriate their gold from storage in London and the US have encountered problems, and the UK even confiscated Venezuela's gold. So, it is interesting that gold has not broken through the barriers of it being tied to the dollar currency rate, the gold price going down as the dollar rises, but we all know that was from the price fixing in the paper gold market in London and Chicago, and nothing to do with the physical and real gold market, and that's why their divergence has now started to appear. I mean, do bear in mind that the actual physical gold transactions are a fraction of the paper gold markets, and they're far more as transparent, despite what the World Gold Council says. Now, a lot of people knew that gold was ready to break out as the dollar and the euro as fiat currencies were facing serious problems. And anybody who bet on gold rising made a good decision. I mean, at the beginning of 2024, the price of gold, although quite high by historical standards at around $2,000 per ounce, had been stagnant for several years since the pandemic. However, During the year, there was a rapid and explosive growth over the 12-month period. Precious metal appreciated by almost a third, and in certain periods it exceeded the $2,700 per ounce mark. Now, the growth was relatively stable throughout the year, although the biggest surge did occur in the spring. So what were the driving factors behind the growth? Fear. The US Federal Reserve's decision to reduce the base rate does appear to have been a contributing factor, and the US financial regulator's decision to ease monetary policy, as evidenced by the fluctuations in stock market prices, has been widely welcomed by the various sectors of the market. Gold was no exception. It's noteworthy that gold has demonstrated yet again resilience in the face of several years of high interest rates, which previously led to a sharp decline in prices. However, in recent times this has not been the case now. Also, the demand for physical gold has increased dramatically, with Q1 seeing the best results since 2016 and Q2 and Q3 reaching all-time highs. Now, it's important to note this, that the demand for physical gold was across the board from a retail up to a central bank level. Now, while the figures for the final quarter of 2024 have not been released, it does look that demand has remained strong relative to average in recent years, despite the likelihood of some drawdown. Now, in 2024, part of Russia's international reserves, which are currency and gold holdings that deposited in foreign banks, remained frozen, and the G7 countries agreed to utilise the income for those reserves for the benefit of the Ukraine. Then numerous new sanctions were imposed on Russia and several other countries. However, the primary concern is not the direct sanctions per se, but the secondary sanctions affecting the majority of countries. Now, many countries that once kept their reserves in US treasuries or in various foreign bonds have realised they can be stolen on the whim of the US, and there's nothing they can do about it. They can take Iran's, then Venezuela's, and then a major power like Russia's, and they can take anybody's. Now, this has led to many countries, including many of those in the BRICS, to make plans to accumulate gold reserves and physical gold and not paper derivatives on the Western market, which in my opinion, to be honest, are not worth the paper they're printed on. Now, these developments have led to a decline in confidence in the dollar and to a greater extent the euro. Consequently, countries are exploring alternatives to dollar reserves. However, as I said, the creation of a fully fledged currency, example from the BRICS group, is a distant prospect. Apart from gold, there's limited options for the secure storage of foreign reserves, so many individuals are now concerned about the stability of the fiat countries, even those that dominate the global markets. Now, the combination of a record ratio of US, EU and Japanese public debt respective to their GDPs, coupled with their budget deficits of more than 5% year on year, also gives rise to concerns about the future. Now, if we look at the individual categories of demand, you'll find that there was a slight slowdown in purchases by the central banks. For example, in Q3 they purchased 186 tonnes of the precious metal, which was half as much as the same period in 2023. However, it should be noticed that purchases by the regulators are still very high by historical standards and similar to the levels observed in 2022. Now, the decline in purchases compared with 2023 can be attributed to the fact that these are high prices that were recorded the year before and exceptionally high figures of purchases. The decline was by the surge in investment demand by the private sector, which surged by 132% in Q3. So gold prices have been declined, mainly by the unusually high prices, but notably Poland has been a prominent leader in investment in gold, acquiring 42 tonnes in Q3, for example. Conversely, China hasn't made any purchases on the market for 6 months, accumulating up until October. However, it started purchases again in November. I think the price was a key factor in this decision, with the Chinese anticipating a slight decline in the metal's value and choosing to hold back from purchases. However, this didn't materialise. The price in decline was relatively modest in October-November, leading to bankers to conclude that it was unfeasible to anticipate a perpetual decline in prices and so move back into the market. So what changes can we expect in the next year? Most analysts believe that the current trends will continue. Gold will rise and remain a safe haven for investors like it has forever. And now, according to Elman Mixkov, who's the founder of CredCheck, gold is growing and will continue to grow due to the economic and political turbulence, which is constantly increasing worldwide. He anticipates an increase in the purchase of gold and other assets by central banks driven by the risks for their countries, particularly the potential impact on foreign exchange reserves due to the increase in cost and price of cryptocurrencies. Dmitry Pukhyarev, an analyst at stock market broker World of Investments, expects the gold price to move from 2,600 up to 2,900. Now, the primary drivers of this is the softening of the interest rates by the Fed in New York and the ongoing purchases of precious metals by the central banks. Ivan Efanov, who's an analyst, anticipates a potential surge above 3,000 by the ounce and that's despite the likelihood of the dollar strengthening due to the Trump taking over the presidency. But gold's ongoing demand persists amongst the market turbulence and geopolitical instability. So, central banks worldwide are replenishing their gold reserves at unprecedented levels, therefore driving up the price of this precious metal. So we'll have to see what goes on. In the meantime, BRICS will continue to save in gold, and in a world where fiat savings can be frozen one day, mistrust in assets not backed by gold is growing, and historically gold has always been very resistant to inflation, which affects every economy. Anyway, so that's the situation with gold. I hope you've enjoyed this video. Please like, subscribe and share, and if you feel generous, do click on the thanks button at the bottom of the screen, and I'll see you all again soon. Thank you.